Excellent talk. Thank you, Andy. We have a panel coming up now for you. This one's going to be interesting on unlocking cross-border investment and innovation. On the panel, we have William Bao Bean from SOSV, Sean O'Sullivan Ventures, and China Accelerator. We've got Lily Wang, Senior Vice President from HSBC, the Hong Kong Shanghai Banking Company. We've got Anton Generalov, Managing Director of Industrial Investors, Michael Fox, Corporate Development and Venture Partner for Green Prosperity Group, and our moderator, Rolf Winkler, Technology Reporter for the Wall Street Journal. Thank you, guys. We look forward to hearing what you have to say.
That's a good thing. Good morning. You guys are so quiet. It's almost eerie. William literally just got off a plane from Singapore. Thank you for joining us, William.
Okay, well, first, we'll get this eventually. First, I want to have everybody introduce themselves quickly. Give me 2 paragraphs about what you do and why it's interesting. 2 paragraphs. Michael he's a talker, so we'll see if he can meet this challenge.
Rolf gets to manage me. This is very organic.
There's no managing Michael.
I'm both an entrepreneur. I've had corporate experience. I launched the Bio at Sony, realigned Mitsubishi's business units. I've also been on the finance side as an EIR for $5 billion fund, and I teach the final thesis for an MBA program. I'm an MIT venture mentor and troublemaker, and have a love of all things international. Less than 2 minutes.
Less than 2 minutes. Anton?
Hello all. Yeah, my name is Anton. So Industrial Investors is a private equity group based in Europe and with business activities in Russia, but we also have a fund here focusing on nanotech biotech, another fund focusing on late-stage software, and also I'll do angel investments, mostly in B2B software space. Thank you.
Hi, I'm Lily Huang. I'm a private wealth banker working with global entrepreneurs and founders in over 60 countries. So throughout my career, I was with SVB and HSBC from Shanghai Times and to here, Silicon Valley.
Okay, I think I have a mic. Okay, so can you hear me? Is it on? Okay, good. William Bao Bean, I'm a partner at SOSV. So we're a VC fund, $650 million under management. We invest globally through our accelerators. Hacks is for hardware. IndieBio and RebelBio for biotech. FoodTech is FoodX, and then I run China Accelerator and MOX. And we help companies from around the world expand to Asia, into China, and into Indonesia, India, Southeast Asia. For my background, I've been doing tech investment 23 years. I was a stock analyst both in the US and then Asia. Last 5 years with Deutsche, where I was the top-ranked internet analyst in Asia, #1 stock picker at TMT, according to Starmind Reuters. And then in 07, switched over to VC. I ran China for SoftBank for 4 years, and then China for Singtel Innovate for 4 years, and then last 5 years with SOSV. So we're we invest through our accelerators. We're the first accelerator in Asia, China Accelerator, now 10 years. And we're the first and only active accelerator in Asia to have a unicorn go through the program, which is BitMEX, the #1 crypto trading exchange in the world. We're about 80% of global trading volume, and the company is worth somewhere between $10 and $20 billion on a PE basis.
So the title of the panel is Unlocking, is this one? Yeah, okay. Is Unlocking Cross-Border Innovation and Investment. But these days, we are not unlocking cross-border innovation, it seems. We're trying to close those borders down. What are the biggest challenges you guys have seen, changes, I should say, in your business when it comes to unlocking value across borders? Trade war related stuff, et cetera.
I won't be shy. With my current effort, I've helped co-architect a model to try to help unlock China for the rest of the world. And one of the challenges that first and foremost is that 1/5 of the planet feels there's theft going on in some way, shape, or form that negatively impacts. Where it sits is unimportant. You have to respect people's fear. And so one of the issues is how do you address that? That's the first
You're
issue.
referring to IP theft?
Yes.
Okay.
So
and forced tech transfer and that kind of thing that people are complaining about.
Yes, in many ways, shapes, or forms, but it's really about, I found that understanding cultural empathy is a tremendous tool, and in order to be able to successfully build that trust factor for a rest of world company looking to try to expand into China, the fundamentals of a true partnership. And it's the emerging middle class, McKinsey says, is 1.1 billion in 3 years. It's an eighth of the planet. I mean, so how does one address that? It's one of the big issues of trying to navigate that issue currently. Yeah.
Anton, is it harder to make investments cross-border right now?
Well, not necessarily. I mean, for investors, maybe it's slightly harder, but for entrepreneurs, I know they do it pretty easily because here the value they bring and the money and the smart ideas they have, that kind of drives their success. But the challenges mostly I see in companies going from Russia to here is the cultural differences, right? So, and the way the people do business. And of course, Russians in general, unfortunately, have less kind of biz dev knowledge. And it's different because, we're a young democracy. In Soviet Union, entrepreneurship was illegal. So that's why it just takes time for Russians, to gain this traction. I mean, they're, as probably a lot of people know, they're very good in, how to say it, they're good in technology, like smart mathematics and stuff, but not so good in entrepreneurial. But I think it's changing.
What does that mean? Give me an example of a cultural difference that's difficult for Russians to bridge, or vice versa.
Yeah, so for example, the thing is small talk. In Russia, if you meet somebody, you go straight to business. And sometimes it creates the tensions. And plus, Russians who move in here, who already have some traction and activity in Russia, they think it's easy. Like, it's okay, a new market, but we already have experience, so now we're going to conquer, US. But then when they come in, they realize that much more challenging, and it's not that easy. And they need to spend some time and do some mistakes to kind of, nail it.
Okay, Lily?
Is it working? Okay. So if you look at the value creations, I would say that in the last 20 years, it has been a global loop. So the value creation and the value exit is not necessarily in the same place. I mean, you have seen US has become like golden listing place for a lot of other technology company. I think China, Korea, so a lot of other companies. And I every time when you have force that break that loop, that it caused problem. And we say that the biggest challenge we have seen is uncertainty. When this uncertainty exists, it makes it very difficult to plan. It break the, when investor invest in a company that abroad, they would like to think about, hey, how can I get my money back? Money need to come out from when you money invest. So I think that has created a lot of roadblocks for what we see in the value creation proposition here.
Sure. Okay. I think now you can hear me. So I think that historically most U.S. companies have chosen to wait until later to go global because they think that the local market here in the U.S. is big enough, and increasingly U.S. is becoming a bit of an island. And I think it's important for companies to go out a little bit earlier. So usually, it's like post B, post C, post D, whatever. Companies are much later before they think, okay, let's go to the rest of the world. And if they do go, they might go to Europe first. But it's a lot easier. On the one hand, it's a lot easier to go to Asia at this point. But it's also becoming a lot more important
Is
to
that
do
still
it
true?
earlier.
I just want to stop you there, William.
Yeah.
Is it still true that it's easier to go to Asia these days, given the barriers that the Trump administration is trying to throw up?
So governments really never stop too many people from doing things in business.
There's your soundbite, everyone.
I mean, there's always a way. You just set up somewhere else.
Okay.
It's really not that hard. It is actually a lot easier to do it these days than it is before. I mean, nobody's ever stopped somebody from penetrating another country.
Michael wants to jump in here.
I think what Anton said actually makes a tremendous amount of sense. There are two Dutch examples that actually I think really exemplify that. I saw a tremendous company, and they productized and they validated, and the Holland's not a very big market, and they were ready to go to the U.S. That was their first big step. And they took their Dutch video and they made it in English. But instead of being for the American market, because they didn't understand the American market, it was actually for English-speaking Dutchmen. So they sort of missed the target and they didn't even see it. And the other is, I found this repeatedly, that when you talk to a young Dutch entrepreneur and you try to recruit them for a company, rather than saying, well, what's my stock package, what's the package look like, they ask you what their pension looks like. And so it's a cultural attitude. Without an understanding and knowledge base of what the different cultures and their impediments and value components are, it's a fait accompli.
Doesn't sound like the question you get from a risk taker. That doesn't sound like the question you get from a risk taker. What's my pension? Which you probably need to be if you're going to start a business.
Yeah. You know, it's really, actually, when I first met some William's colleagues in Singapore, I don't know how many of you have spent any time in Singapore, but is a really great example. The intensity of innovation it transcends the culture, and it literally down to the taxi drivers. Everybody's thinking about it. But one of the things I found in that culture was there was just an incredible impediment with failure. And you know, they go one with the other.
What do you mean an incredible impediment with failure?
If you're, I mean, William, you could speak to it much better than I could, but if you fail in Singapore and you're Singaporean, you're done. I mean, you're pariah.
Is that true, William?
I don't really spend that much time in Singapore, except to go fundraising sometimes. It's a nice place. Most of the VCs live there because it's kind of like San Francisco, sort of clean and nice.
You just described San Francisco as clean and nice?
Yeah.
You just lost a couple points.
I live in
He
Shanghai.
doesn't live in
It's,
San Francisco, everyone.
It might be cleaner than it used to be, but it's not exactly
What
it's
part
not
of
really
town do you
nice. But Singapore, I mean, yeah, there's less of an appetite for failure there, much less. China, that you're allowed to fail, and then you know, as long as you come back and keep on fighting, you know, it's a lot more similar to here. But Singapore, you know, if you look at the top startups coming out of Singapore, almost none of them are run by Singaporeans. And there's, you know, this is a debate that they have there. They're not really sort of born and bred for risk. Now it's starting to change. But most of the top companies coming out of Singapore are actually led by people from elsewhere, similar to the US.
Okay. What has been the impact lately? This was something in David's talk, I think. Is David here? I haven't seen David. He's right here. David, maybe you can come here and comment on this too. The impact of what's happened with WeWork recently and the whole megacorn thing that had been going on. It seems like these companies we're seeing valuations drop pretty dramatically for a lot of these companies. What impact have you seen in your worlds as a result of that?
Lily, you should take that one.
Yeah, you want to go first?
I can't comment on that company particularly, but I would
Speaking
say,
generally.
So generally speaking, one of the discussions is valuations for private companies, and it has been a topic for Wall Street. And also, I mean, this is a sector that has grown. The market size of private capital, comparing to the public capital, has grew about 20 times since the last 15 years, decade. So this is the area that we wanted to understand, right? And the key question is, how do you value? What's the valuation of a private company? I mean, there are so many forms of valuation of private company that exists, like the 498. I think there's a discussion about, you know, valuation should no longer be set by the investors, or, you know, this is the area that we wanted to, you know, the market wanted to understand about from they need to have certain transparency. When there's a lot of money put into a category, and you need to have rule and transparency. And I think that is the area the market needs to introduce to learn more about a solution here.
Anton, do you want to jump in? I'd be curious from an investor's point of view, is less capital going to flow to some of these private companies?
Well, yeah, I think so. I want to say something shocking. So on the other hand, like investors, partially wants to blame for such situation that happened, because we as investors, we invest mostly in growth, right? So you care about revenues, but not so much, especially in the beginning. And that's created, I think, this problem when you know, investors want to show growth, so you go for growth, you burn tons of money to show it, but in the end, it's not a feasible business anyway if it doesn't self-sustain. But on a global perspective, I think it's good because now we see that valuations are crazy high at this particular moment. And basically, you know, small recession will not gonna hurt, right? Because in terms of the valuations will be more reasonable.
How do you, so I'm going to ask you the first hard question here. You guys are an investor in Robinhood.
Yeah.
How big, last private valuation was 5 or 6 billion, I think?
Yes.
Well, how much revenue do they have today? It's very small. It's something measured in the tens or not even $100 million?
Yes, I think close to 200, 300 now.
It is, okay.
Yeah, so, but the thing is they're, well, basically profitable already, and that's, plus, I think they took it seriously, so as you know, they switched the co-founder to the professional CFO, who is kind of building a bridge between Wall Street, so on my perspective, I think they're doing it the right way.
Okay.
Yeah, valuation is high because they're like on the hype at some point, right? Because they created this whole new market for millennials, but in general, I'm kind of safe, but of course, I'm also nervous because, you know, there is good news, there's bad news, they kind of come and go, but now I think they're on a good trajectory and I believe they will be like sustainable, normal business when they go public.
William, I think you wanted to jump in there.
Well, I mean, I don't come here that often anymore, but one of the things I think most people here don't understand that, you know, last year VC investment in China surpassed the U.S. Now, most people understand that the numbers in China are a little bit suspect in terms of how you exactly measure that, because a lot of people inflate the amounts of money that they raise. But it was, you know, about the same or probably higher. Now, since then, it's
They do. How do they inflate those numbers? Like how? Sounds like you're an expert here. How fake are they?
Probably take 20-30% off.
Because they just say we raised 100 million, even though it was actually
you
70.
guys familiar? I mean, what SoftBank? I was at SoftBank. I ran SoftBank in China before Vision,
Yeah.
so it was a bit different. But in China, you know, money is a weapon. Okay, and so if it's a weapon, you want to defend yourself at it. And if you don't have a very sharp weapon, you want to pretend that you do. So you want to say that you raised $50 million.
Again, another quote. If you don't have a sharp weapon, you want to pretend that you do.
Yeah, if you only raised 20 million, you want to say you raised 50.
Yeah. Okay. That's.
So you want to scare the other VCs.
But don't people get a reputation for lying? Somebody's going to figure out that you actually had 20 when you only had 50, and everybody's not going to trust you anymore. Is that not a concern?
No, everybody just haircuts it, handicaps it.
Okay.
So, yeah. But the
Speaking of
idea is that
cross-cultural,
money is a weapon. So you've got companies like Vision, you know, funding lots of money and trying to build winners with money.
Yeah.
And so we're pretty used to it. Now the problem is that the equity markets for both China and the U.S. are, you know, NASDAQ, NYSE, right? So that's why you're getting IPOs later, like a lot later. And it takes a while for things to catch up. And then a lot of times it's a boom bust. In China, we have bigger boom busts than you have here. But the busts, you know, they can last 2 or 3 years where nobody goes public, right? Because the U.S. is not really sort of ready. And then, like last year, you had a flood of China IPOs come out. And they had 2 or 3 years in which to kind of get closer to profitability or closer to rationality. So this is just sort of an Asian kind of approach, filtering back here, you know, using trying to be a world leader, but basically on a checkbook, and then the execution catches up with it.
How do American? Oh, Lily, you want to jump in there?
I think that adding to William's point, set aside money, also timing and speed, also another weapon as well. And the sense of urgency, what we have seen in the value creation for tech company in China, it just far ahead of anywhere we have seen. I mean, we seen the data about, it takes about 7 years from inception of company to IPO, right? That's the healthy cycle we have seen here. In China, I would say that it's, you know, I can't remember there's a data that we have seen, but it's about 3.5 years to 4 years time. Maybe William can verify that. But so we definitely have seen the different sense of urgency and growing in company and being a market winner in the company. And because it's a much younger market, the dynamic also very different than here as well.
William or Michael, you want to jump in here?
I thought we had learned our lesson about irrational exuberance, but I will say as a EIR and ops guy who likes to build value. The growing trend with guys like Andreessen who are moving further up the value chain, actually helping the companies and physically doing heavy lifting for risk mitigation, I think is tremendous. To really
Well, this is a good question, because speaking of WeWork, can the private company investors really fulfill that role of risk mitigation? What people will argue, I'll throw this at you, the IPO process is the most probably thorough examination that any private company is ever going to undergo. If you're going to do that, the auditing's got to be in order, control everything. But if you remain in the private markets, as we see with WeWork, Adam Neumann was on his own compensation committee. Few people know that. That's just, you don't see stuff like that. So my question is, are the private market investors failing in their job to make these companies grow up?
Respectfully, I think WeWork's not necessarily the right example.
Uber, Uber is another one.
But when you see, look, I've seen a lot of selectively early stage investors, guys like Duncan Davidson at Bullpen, for example, who, even though that's not part of his investment thesis to help his companies, it's part of his DNA to help, even though it's post-investment, checks written, everything's deployed, he makes it a point to try to help in a visceral way, look at how can he help extend reach. And I historically have found most investors tend to take a very hands-off approach, very armchair, they don't get physically involved, they're worried about exposure, worried about not being successful. But those that do and take the chance, it's a risk mitigation exercise. And if you take that leap of faith, it tends to be immense. The reward is tremendous, and it's not just about money, but about extending into new markets. And when I look for help when it comes to banking, finance, and culture, I have no hesitation to call Lily, to learn, to make sure what not to do. And those people that try, and I believe it's a growing trend with some of the people at the front end of the investment community. But with WeWork, it's at the very back end, and it's not. So I want to see what there is. What value add? I mean, it's great that SoftBank is going to get involved. What does it mean? I mean, in terms of what the substance is.
Okay. I hope you folks probably have some questions, so get them ready, and I'll just call on people. We could probably hear you. But before we do that, I'm curious about, again, cross-border innovation and investment. One cross-border issue of the past few years has been CFIUS. How has that changed the way you operate?
So that's been a huge advantage for us. So last year, I saw some article that there was about $3 billion of Chinese money that came into Silicon Valley. And as far as we can understand, it's not really coming here anymore. So where is it going? So actually, a lot of that has gone to the rest of Asia. And since we help companies from around the world expand to Asia, we also invest across Asia. We're seeing a lot of that money come into our portfolio companies that are sort of US dollar international startups, but more focused on Asia, so non-US.
Have you seen companies that are, like, let's say a Chinese American founder or somebody, or Chinese national who's here who came to Stanford and wanted to start a company but can't raise money here? Are more of them going back to China because CFIUS makes it harder here?
There is a trend where you have a group of engineers who want to do a China or a global business, but they don't want to leave this nice environment. So they set up their R&D here, but the company is headquartered and focused on other markets.
Okay.
And they raise internationally, but their tech team's here. But what we're talking about is more like a big flow of money from China and other places into Southeast Asia and South Asia, India. Okay. So if you look at India, 3 or 4 of the top 100 apps in India in 2016 were Chinese.
Okay.
14 of the top 100 in 2017, and 47 of the top 100 in 2018. And 4 of the top 5 cell phone brands were Chinese, up from, including the number 1 Xiaomi, up from, I think it was, maybe 1 in the top 5, over the same time period. So there's been a shift outside. It's actually quite interesting because you have Google, Facebook, Amazon, not so much Apple in India. And then you have the Chinese internet players in India.
Okay.
And oftentimes through investments. So, Indian face, Chinese tech, Chinese money. And it's the first market where the two sets of sort of companies are going head to head.
Lily, you have the additional challenge of, say, capital controls coming out of China.
Yeah, definitely. So capital control has always been there, but just before, a few years ago, there's more flow, more channel go through. I just had a lunch with a friend of mine from DC. I learned that a lot of DOJ attorneys are very popular right now. Like, so many law firms, they were trying to hire that people has DOJ experience. And so what I learned is the civics impact is psychologically much more, broader than it is actually will be, or is. And this is a bipartisan sentiment that it will, exercise more controlled over the cross-border investment. And, it's a very complicated topic, and I think that unfortunately this is probably going to be going down to a different, looks like it's going to be a different environment trajectory what we have experienced in the past. So, and also in the in the capital flow, what I work with a lot of family offices and ultra high net worth individuals. This definitely psychologically has impacted them. And look at I remember a few years ago, Silicon Valley, many of the funds has. Many of the funds have been talking with the LPs from abroad, but I know that the dialogue has stopped.
Okay.
Yeah.
Okay. Anton, do you have any?
Yes. So
impact?
I mean, on our experience, so we didn't have any issues with it yet. But in general, I talked to a lot of my Russian friends, and a lot of them who are going through the process. So I mean, if you're clean, it's okay, right? So it just takes time for this kind of due diligence to come over, and that's also put additional challenges to, of course, entrepreneurs, because they need to wait for like 6 months sometimes, right? So for the investor to go through the process, so that's going to make it hard. But in general, it's...
If I have to wait for your money, I'd rather have somebody whose money I don't have to wait for.
Exactly,
Yeah.
exactly. So it's also put more challenges on investors, right?
Yeah.
Because now, entrepreneurs will think twice, right? Okay, maybe I will take money from like US investor who don't need to go through this process or something like that. But on my experience, it also depends on what part of the country you own. So if it's like less than 10, it's kind of easier, it's going faster. And of course,
What kind of company you're investing in?
So I mean,
these
if
days?
we're talking about for cybersecurity companies, then it's a really big challenge.
Yeah.
But other companies, as I heard,
Semiconductors.
as now it's okay. Especially software, it's more or less fine.
Okay.
But still, we'll have to see.
Michael?
I'll be quick because I know we're supposed to finish, but it's also, there's a wave of sadness. I saw one company that they had a breakthrough. It was a petabyte disk data storage array that was wireless, these petabyte bricks. Amazon wanted 147, and they took money from Boeing, from Horizon X. It's a solid company. It would redefine how we do data storage, but because of taking Boeing money, their ability to take foreign money, that company is at risk. And it's a hard enough building company, but this business of CFIUS is an incredible pediment, even for stable companies. And it makes me sad. It's
Okay.
really unfortunate. So anyway,
Do we have time for an audience question, or we're running short, so we're done. Thank you so much.